Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Excuse me. Good morning, JC, or good afternoon here. Uh, Thanks for the confirmation. Welcome. Before I get started, I need to go through the disclosure, general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day as well as a directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And this is a new, different way of looking at the market. Many traders use technical analysis or fundamental analysis. And again, this is something new, positional analysis. And finally, on-topic questions and comments are welcome. And I will be watching the Options-Doug chat channel in Discord and the chat in YouTube. So again, please post your questions and comments. They're welcome. All right, let's get started. What I want to talk about today is economic data and events coming up this week. Then we'll go through our positional analysis and talk about a plan, and then we'll look at some setups. So first of all, let's just take a quick look at the economic calendar for the week. And the main event is the FOMC meeting on Tuesday and Wednesday, and then the announcement at, hold on, I thought I had my pen tool open. All right, here we go. So the meeting on Tuesday and Wednesday, the announcement at 2 p.m. Eastern Time on Wednesday, and then the press conference begins at 2:30 p.m. Eastern Time, the normal schedule. And I will be on from 1:30 to 2. I will be on from 1:30 to 2, so I'll be on 2:30. 1:30 to 2:30. So I will be on for the announcement and then wrapping up as the press conference begins. And in YouTube, Luke asked, Doug, will we get a 1080p stream? Yes, join us in Discord. This is all I can do in YouTube, and I'm seeing a 720p stream on my end on YouTube. But in Discord, I'm streaming at 1080p. So it should look okay at 720p, but that's the highest setting I can find on YouTube. All right, so that's the Wednesday. That's the main event of the week. And then just briefly, later on in the week, jobless claims on Thursday, and then durable goods orders on Friday at 8:30 a.m. Eastern Time, and then there's some PMI data out at 9:45 a.m. And while we're talking about the FOMC, let's just take a quick look at the CME FedWatch tool. And this is showing the projections for the upcoming meeting. Right now, the current Fed target rate is 450 to 475, and the market is pricing in a 27% chance of no move by the Fed, maintaining that current rate, and then a 73% chance of a 25 basis point rate hike. Okay, so that is that's the events for the week. Again, the big event for the week and probably for the month is the FOMC meeting and announcement on Wednesday. All right, let's take a look at it. Let's go through our positional analysis now, and we'll start looking at some charts. And this is the S&P 500 futures, the ES, in Bookmap. And before I dig into this chart, I want to take a look at a larger time frame. And this is SPX in a 20-day 1-hour chart in Thinkorswim. And this is showing just price and key Spotgamma levels. And these levels are provided to Spotgamma subscribers in a think script that you have to manually download and update. It just takes a couple of minutes every day. And the key levels here, this is the put wall at 3,800. Again, this is SPX, the put wall at 3,800, and that has not changed. That's the strike with the largest net negative gamma, and that can be expected to act as support. And then 4,000, well, let me go, actually 3,950. The next level up, that is the volatility trigger. And that's Spotgamma's proprietary gamma flip level. And below that level, market makers are in a negative gamma position, and they have to hedge in the direction of price to hedge their delta exposure in a negative gamma environment below that level. And then above that level, that's their position on the gamma curve is positive, and they have to hedge against price to hedge their delta exposure, or they trade against price to hedge their delta exposure. And then 4,000 level is the key gamma strike. That's the strike with the largest absolute gamma, and that can be expected to act as support or a resistance or a magnet for price. And then finally the call wall at 40.65, and just a reminder, that is the call strike of the JP Morgan collar that expires on March 31st, the end of the month. Okay, so those are the SPX levels in a larger time frame, and what Spotgamma was calling for today was for SPX to most likely stay within a narrow range here between this 3,900 support level and the 3,950 resistance level. And that was in the AM Founders Note. All right, so that is a 20-day chart. Let's take a look at another Thinkorswim chart, and we'll take a look at a smaller time frame. This is this is just today, a 1-day, 1-minute chart, and showing the 3,900 level and the 3,950 resistance, volatility trigger resistance level. And it looks like that has acted as resistance a couple times. And when we look at SPY, we'll see that SPY, the 394 volatility trigger, was actually the resistance up here. All right, let's go take a look at Bookmap now. And the reason I look at those thinkorswim charts is they're just showing price and levels again for SPX. What I have the same levels on this chart. They're just shown a little bit differently. This is the Spotgamma cloud notes provided to Spotgamma subscribers. They provide these levels to Spotgamma subscribers for a number of different platforms. And for Bookmap, they are provided in the form of cloud notes, which are updated automatically. And this is showing there's the 3950 level. Spotgamma right now today is using a 40-point difference between ES and SPX, and I calculated about a 32-point difference. So I'm showing my SPX 3950 level a little bit lower. So that is the 3950 resistance level, and that I'm showing that in my cloud notes columns. And also I'm showing the key SPY gamma levels, and this is the SPY 394 volatility trigger, and then down here is the SPY 390 key gamma strike. So those are the levels that are in play for today, and we will take a look at setups in a few minutes. So overall, the S&P 500 ES SPX SPY has been bullish today, and still so far confined within that approximately 3900 to 3950 SPY 394 level. All right, let me take a look at questions in YouTube. All right, so Luke, I don't understand your question. Overall delta looking, I don't understand your question. And JT and YouTube says he has 32.5 difference. I round it typically to the closest round number. I'm not showing it exactly. And Luke, we will look at hero charts in just a few minutes. Okay, so that is the S&P 500 showing the levels in play, and let's talk about shifts in levels. And remember, last Friday was the March expiration, so now we're looking for traders to build positions into the next monthly expiration, which is April 21st. That is the third Friday of the month. So a lot of the gamma that came off on Friday, and then we'll be looking for traders to rebuild positions. Now shifts in levels, as far as SPX, there were no shifts in levels. And then for SPY, the put wall shifted lower from 390 to 380, and then the call wall shifted higher from 397 to 402, and then the key gamma strike shifted down from 400 to 390. So shifts up and down. I would generally interpret that as slightly bearish for SPY. And then for QQQ, the volatility trigger shifted up 1 point from 301 to 302. Put wall shifted down from 290 to 285, and then the key gamma strike shifted lower from 305 to 300. So somewhat bearish for QQQ as well. And Alejandro asked, hello, what is your configuration for stops and icebergs? Okay, so Luke, and again, we'll look at hero in just a minute. when we get to our when we're through with our positional analysis. So, question about stops and icebergs. So I have two. There are two forms of stops and icebergs indicators, and I'm using both the subchart and the on chart. So on chart, I'm just using the automatic levels for icebergs and stops. So I just set this to automatic individual threshold. And then for subchart, I'm actually using the sum mode for both stops and icebergs. So that is why in the subchart I have these continuous lines like that. They're just showing cumulative stop orders, cumulative icebergs. So icebergs in blue and stops in yellow. And with this setup, I think I have the best of both worlds. In the subchart, I can see the sum mode, the accumulation, and then I can see the events with the on-chart indicators. Okay, so those are the shifts and levels, and let's take a look at the gamma charts now, and we'll see where those levels come from. So this is the absolute gamma levels. We'll start with SPX, and again, we're going to show where those levels come from. This is showing absolute gamma levels, market maker's position at these strikes, and above the zero line, that is showing positive gamma or call gamma, and below the line, the zero line, that's negative gamma or put gamma, shown with the teal bars below and the black bars above. So the key gamma strike, or the absolute gamma strike for SPX, remains at 4,000. And again, that's the strike with the largest absolute gamma that can be expected to act as support or resistance or a magnet for price. And there's the 3,800 put wall, the strike with the largest net negative gamma that can be expected to act as support. And then there's the 4065 strike, the call wall, the strike with the largest net positive gamma that can be expected to act as resistance. And again, that's the call strike of the JP Morgan collar that expires at the end of the month. So that's SPX. And note I'd say the slight dominance of put gamma below the 4,000 level. Let's take a look at SPY. So for SPY, now the key gamma strike, and still have the zero line, put gamma or negative gamma below, call gamma or positive gamma above in black. And here is the 390, the new 390 key gamma strike. And here's 380, the new put wall. And now remember, the call wall has increased up to 402. And there's a more prominent dominance of put gamma for SPY below the 400 level. And while we're on this page, let's take a look at the combo strikes. And this is combining gamma levels for SPX and SPY, showing those levels in one chart and converted to an equivalent SPX price. And note here, recall the volatility triggers at 39.50. And there's that level is about right here, and you can see the put gamma below the zero line, and the call gamma above, and that's in that's showing the volatility trigger. Spotgamma's proprietary gamma flip level, negative gamma below and positive gamma above. All right, let's take a look at NASDAQ. And for NASDAQ, we just look at QQQ. And for QQQ, 300 is the key gamma strike, down from 305 last week. 285 is the put wall, down from 290 the previous week. And then 310 remains the call wall. And note the dominance of put gamma below the 300 level and call gamma above that level. And then finally, well, actually, no, that's it. We'll move on from there. All right, so let's take a look at the data now. And the thing that I always like to focus on is the gamma notional. This is market maker's position on the gamma curve. And this is showing SPX in the left column, SPY in the middle column, and QQQ in the far right column. And this is from the Spotgamma AM Founders Note. And notice for all these indices, the number is negative. Again, this is market maker's position on the gamma curve, indicating that market maker's position is negative for all these indices. And that means that traders are long puts, market makers are short puts, and as price falls, they have to sell futures to hedge their delta exposure. And as price increases and implied volatility drops, they can buy back their short futures. And the changes in gamma notional from last week, last Friday, were actually mixed. So for SPX, the gamma notional market maker's position on the gamma curve became slightly less negative. Last Friday it was minus 548, and today it's minus 518. So slightly less negative, but still negative. And then SPY went the other way. Last Friday, gamma notional was minus 1430, and today it's minus 1836, so it became more negative. And then last Friday, gamma notional for QQQ was slightly positive at 20, and today it has shifted back to negative at minus 66. So again, market maker's position on the gamma curve is negative for all these indices, indicating that market makers will need to hedge in the direction of price to hedge their delta exposure, and that can tend to increase volatility. Okay, let's take a look at the Vanna charts now that illustrate this concept. And what this chart is showing is market makers' delta notional in the vertical axis and the price, strike price, on the horizontal axis. So this is showing how market makers' delta notional changes with changes in price and implied volatility. That's shown by this green curve here. And this is showing that market makers' delta notional will increase as price decreases. This is typical of a negative gamma environment, indicating that market makers will need to sell futures as price drops again, and they can buy back their short futures as price increases. And again, the green line is showing that how that changes with implied volatility. That's the Vanna effect. The change in delta with the change in delta with a change in implied volatility. And then the black line is showing how that delta notional changes as time passes, and that's the charm effect. The change in delta, again, is with a change in time as time passes. So that's SPX. Let's just take a look at SPY. And this is kind of interesting. But anyway, this is a much steeper curve. Recall that the gamma notional for SPY is quite a bit larger than for SPX, minus 1836 compared with minus 518 for SPX. And then finally for QQQ, much more neutral. Just a slight slight tilt to the upward tilt to the left. All right, then finally in our positional analysis, let's take a look at the this watch list. This is my key gamma strike list. These are all the stocks on my watch list, and I track the key gamma strike every day. The far right column, the E column, is showing the previous key gamma strike from last Friday, from the previous day. And then the D column, current key gamma strike, is showing the key gamma strike for today at the beginning of the day. And I color code these red or green. Red indicates that the number decreased from the previous day, and green indicates that it increased from the previous day. And I interpret a decrease in the key gamma strike as bearish. Traders are looking for lower prices, they're accepting lower prices, and they're positioning themselves in the options market based on that. And then just the opposite for the for a green, for an increase, I interpret that as bullish. So bullish for Apple and AMD, and bearish for Microsoft, Nvidia, QQQ, Snowflake, and SPY. And then also note the increase in the key gamma strike for VIX, indicating traders were building call positions above the previous level at 22. All right, so that's my positional analysis. Actually, so we'll talk about the S&P 500 first. So based on this, there's so much going on in the news, especially with financials, that my plan really was leaning slightly bearish, but certainly to look at a couple things during the day. And the first was VIX, and this is for today. Actually, let's zoom out, and this is the starting overnight. Actually, so this is starting overnight. VIX steadily falling up until about 11:30. It looks like it's made kind of a double bottom at around just over 24. So that was the first thing that I was looking at. So seeing a falling VIX, that is a bullish signal. And then also, let's take a look at the financial ETF. And notice that it was rising in pre-market trading, and up on the day, I know you can't see it up here, but up on the day a little bit over 1%. And let's just take a look at one other thing. What I was looking for today was watching these sector ETFs, the SPY select sector ETFs. And this morning, the XLK was actually negative on the day, and now it's just slightly positive at 0.11%. That's the technology sector spider. And then notice the financial ETF right here is up about a little over 1%, 1.14% right now. So what I was looking for this morning really was a rotation out of technology stocks. Tech was so strong last week that I expected traders to potentially want to take profits out of those tech stocks and rotate into financials, which were somewhat beat up last week. And so that lines up with what I saw again on my key gamma strike list here. And let's take a look at another chart from Microsoft last week. And here, let's go to, actually let's take a look at, this is the expected move. Let's go to Microsoft. So this is last week right here. This is the this is Friday. Yep, that's 317. So this is last week, starting here. This is a daily chart, 1 day chart. So this is these levels right here. That was the upper edge of the expected move, lower edge of the expected move. So notice how far Microsoft traded up above the upper edge of the expected move. Just a crazy move in Microsoft. So I was given this crazy increase in Microsoft. Then notice the decrease in the key gamma strike. And then finally, let's take a look at, oops, here we go. This is Equity Hub for Microsoft. And note here, this is showing the decrease in the key gamma strike. This is Friday to today. Even though Microsoft was really strong on Friday. So that was what I was looking at, and I was looking for a short in some of these large cap tech stocks. Microsoft, AMD, the stocks that were really strong last week. Now AMD did actually have an increase in the key gamma strike, but Microsoft had a decrease in the key gamma strike. And then so what I did is I was looking for a short, looking for a rotation out of technology stocks into financial stocks. And I posted my watch list in Discord just before 10 a.m. ranked from the weakest to the strongest. I usually post that in alphabetical order, but this was my plan for today, and Microsoft was at the top of that list. And for those of you who are don't have access to or not joining us in Discord, first of all, I invite you to join. It's free and open to everyone, whether you subscribe to Bookmap or not. So anyway, this is what I saw in the morning, Microsoft, and I'm ranking this by hero signal. And what this is showing is the strength of the hero signal compared to the last 30 days, and that's shown by the entire length of this slider here, and then the colored portion is showing the last 5 days. So Microsoft was not at the very lowest, but in the low end of the range for the last 5 days and the last 30 days. So a weak hero signal. So that lined up with my thesis and my plan as well. So the crazy move higher last week, the drop in the key gamma strike, even though Microsoft made that move up. And let's zoom in on the morning. And this is what I saw in the morning session. A very strong confirmation between hedging flow and price action. For those of you who may not be familiar with this chart, this is Spotgamma Hero. The white line is price, Microsoft price, and the purple line is showing options trades and market maker hedging flow. Hero is hedging impact of real-time options, and this is showing that traders are taking negative delta positions. All right, let's go take a look at Bookmap now. Let's go to Microsoft. So here's Microsoft. I'll zoom in on the morning. So recall the weaker tech stocks today. That was my thesis. That was my plan. Looking for stocks with the weakest hero signal. That's I rank my stocks like that. Saw the weak hero signal for Microsoft. Again, the falling key gamma strike down to 270 here, and just looking for bearish setups. So that was the plan. That was great setup this morning, great short setup. All right, let's take a look at some others. And note the target at the 270 key gamma strike and the high liquidity at that level. A couple of tests of that level. All right, let's take a look at AMD. So here's AMD. Let's take a look at Hero. Look at the morning session. And this is normally when I trade. So there's a strong confirmation, just like Microsoft. Not quite as clean as Microsoft, more up and down. But traders taking negative delta positions and price responding. Let's go back to Bookmap. And nice drop this morning, nice short setup. We'll zoom in on this. Oops. Okay, so here's AMD. Again, great short setup, and notice that it goes down to the lower edge of the expected move. That's what this is, LEM, lower edge of the expected move for the week. That's from the options market, and also the liquidity down at 93. So there's your target for AMD. Good for a 3.5 point move. All right, let's take a look at NVIDIA. And NVIDIA there was a good short setup this morning, but it looks like the play was to go long. Looks like the dip buyers couldn't resist NVIDIA. All right, so there's NVIDIA short setup in the morning. Let's take a look at Hero. Go go to NVIDIA. So there's the short setup in the morning, and notice how price increases, hero levels off, starts to increase. So this was, for me, a little bit, this long setup was a little bit difficult to interpret. I'd want to see more of a confirmation of hero, a stronger rise in hero before I took a long there. Let's just zoom out. So overall, this delta is still negative. It's about negative 93.95. Still, so hedging flow overall is negative delta, the notional value. Let's just see what traders are doing. So they're buying puts and selling calls in NVIDIA. Let's take a look at Amazon. And different story here. Divergence long. All right, so RJ asked, is NVIDIA being driven by 0 DTE? And no, for Monday there is no 0 DTE for NVIDIA. Now it could be driven by next expiration, which is Friday, but stocks like NVIDIA have weekly expirations only. So QQQ, SPY, and SPX are the only instruments that have 0 DTE options, as far as I know. All right, so this is a divergence long setup. Notice price falling. Traders are taking positive delta positions. Let's go take a look at Bookmap. Take a look at Amazon. And there, I need to tone down the absorptions and sweeps. I'm seeing too many small dots. So there's the reversal setup. Microsoft, AMD were much better setups, and we'll see Tesla was the best long by far. All right, let's take a look next at Meta. Go take a look at Hero. And Meta was up and down. Confirmation short in the morning. And then a divergence long here as Hero starts to increase. And then price follows about 10 minutes later. Let's go take a look at Bookmap. So there's the long setup. Let's zoom in on this. And note there is somewhat of a shift in order flow here. Notice all the green dots coming in. And a double, kind of a triple test of the 194 level. All right, so RJ asked, do you find CVD tells you much information in single stocks? And not consistently, no. You know, if it's going in the direction of price, that gives me another confirmation, but I would not make a trading decision solely based on CVD. One thing that I have been looking at is, and I'm not showing it now, it's just too cluttered for this presentation, is this market pulse indicator. This is something new, and there are several different algorithms here. I don't have one up for Meta, but I was watching this morning. There's price change, spread change, volume pressure. I normally look at volume pressure for the futures, ES and NQ, and then I've been looking at price change for stocks, and you can look at several of these at the same time. So this morning I was looking at Microsoft, Tesla, and NVIDIA, and I could look at one chart in Bookmap and see, that would give me some kind of indication of what other charts were doing. And anyway, as soon as I have a better feel for this, I'll show it and talk about it. All right, so that is Meta. And let's take a look at QQQ. Go back to Hero. So again, Meta, confirmation, short and long. Take a look at QQQ. Take a look in the morning, and this is confirming a short at the open, then long after that. Let's go take a look at Bookmap. So kind of a choppy morning in QQQ before finally moving higher. I found the single stocks that I talked about much easier trades. All right, let's take a look at the S&P 500 now. We've already looked at the ES. Let's take a look at SPY. So the thing that I saw this morning, actually let's just leave that. Let's take a look at, let's go take a look at Hero now. And I posted this in Discord. All right, so in YouTube, JEC says Amazon was a great setup, and he's also a huge fan of Market Pulse. He has a few setups he's really liking. Great, I'll look for them in Discord. Okay, so this is the S&P 500 combined signal. This is combining options trades for SPX, SPY, and XSP, which is insignificant compared to the other two, into one combined signal. This is what I look at, whether I'm trading ES futures or SPY shares or SPY options or SPX options. This is the signal that I look at for the S&P 500. So let's zoom in on this. Actually, let's just go. So this is showing from the open. And what I saw, let's just zoom in. Showing about 9:30 to 11. That's what I posted. So I'll zoom into what I was posting, what I posted. But still too much. Sorry about all the scrolling. All right, so anyway, what this is indicating to me is that traders are taking negative delta positions as price was increasing toward the SPX 3950 level and the SPY 394 volatility trigger level. And it took a while for this to set up. And the thing to do is when you see this, if you're looking for a short, you see Hero falling like this, and it's kind of choppy. See Hero falling. The thing to do is go into Bookmap and just watch order flow on your levels to look for short. So let's go to Bookmap now. We'll go to SPY. And sometimes SPY is just a little bit simpler to look at. And I have my cloud notes in SPY. For every stock I have cloud notes. And this is showing, I show the key gamma strikes and or the key daily levels from Spotgamma with a white background, red text, and a white line. Just the basic round numbers with a yellow line and yellow background. So here's the 390 key gamma strike. There's the 394 volatility trigger, which did act as resistance. So there is the, if you were looking for short setup, there it is. There's the sweep. That all those small green dots are a buy sweep into the 394 level. And I'm also showing the SPX 3950 level there. So a sweep into the 394, and notice I'm showing SPY and SPX levels. It's important to keep track of both. So a sweep into the 394 level, then a break of the trend line at the 3950 level, then a short down to SPY 391, and notice the green dots coming in there and all these. So that's a buy sweep at that level, and then all of the blue dots are passive orders absorbing those sellers. So let's go take a look at, let's go back and take a look at Hero. So there was a short setup in the S&P 500, and there was so there's a question earlier about SPY and SPX looking on the Hero chart. Let's go back. We'll take a look at Hero again. So again, I'm looking at the combined signal. Let's zoom out. I'm going to zoom out for the regular trading hours here. So there's from about 9 o'clock, and so far has been trending down negative delta positions up until about 1:30, 1:45 Eastern Time, where it seems to be moving up. So this is a combined signal, SPX and SPY. It's combining this signal, which is bullish. This is SPX. So this is pretty typical. Traders are buying calls and buying puts, but the call buyers are winning here. This is positive 1.14 billion. That's the notional value versus minus 604 million. So the call buyers are winning. Let's take a look at what SPY traders are doing. And overall, the hedging flow is negative. That's minus 982. Let's see what traders are doing. So for SPY, the put buyers are winning. So there's SPY, and the overall chart looks a little bit more like SPY than SPX. All right, so RJ asked, could you see the put call for the S&P 500? All right, so I showed that for SPY and SPX. We'll take a quick look at here's the S&P 500 again. We'll take a look at puts and calls. So this is showing that in this case, put buyers are winning, minus 2.7 billion versus 2 billion. So put buyers are winning. All right, let's take a look at the, RJ wants to take a look at 0 DTE. So there it is alone, pretty insignificant compared to the numbers that we just saw, and pretty choppy as well. There's all trades. So in this case, 0 DTE is not having I would say not having as much impact as the overall signal. Minus 176 million versus minus 963 million. So I look at that occasionally, but it generally does not provide any tradable information unless there's just a strong correlation. All right, so let's wrap it up. Let's take a look at Tesla. And as usual, Tesla, there's an extremely strong correlation between hedging flow and price action. Traders were selling puts and buying calls in the morning, and it looks like they've continued, come back from lunch and starting to buy calls and sell puts again. Let's take a look at Bookmap and we'll wrap it up there. So here's Tesla. And Tesla, the order flow is, in my mind, typically pretty easy to read. And here's a case. There was a question about CVD before from RJ, and for RJ, for Tesla, I typically do look at CVD. It does provide valuable information, and you can see that Hero is rising, and look at the all these green dots coming in, market buy orders. So Tesla was very bullish this morning. And a quick rise up to the liquidity at 185 and 186. And now it looks like traders are coming in again. And in this case, the order flow is still looking bearish. So the trade was long Tesla in the morning shortly after the open, with the rising CVD, rising Hero. Okay, that's all I had for today. I think I've answered all your questions, and oh, excuse me. So just keep in mind again, the FOMC meeting starts tomorrow, and the announcement is on Wednesday at 2 p.m. And then also Wednesday is the VIX expiration. There was a discussion in the Spotgamma AM Founders Note about behavior around the VIX expiration. Sometime last year could lead to a rally. But anyway, we'll keep an eye out for that. So again, thank you very much for your for watching, for your questions and comments, and I will see you tomorrow.